So if you guys seen this article, cool. Now, many people create articles from prominent individuals who call massive bets and actually capitalize and win off of those bets. Enter Michael Burry, the big short investor who saw the market crash back in 2008, made billions of dollars, right? Now he has created an image, a reputation that whatever he does, then people need to pay attention, because if he saw that back in 2008, the housing crash, then maybe he knows something. Maybe we might need to start paying attention to what he does with his fund, Scion Asset Management. All right. So this article from the Star was printed today. Michael Burry adds to China big tech wager. So now we got to look at the pockets of these billionaires. You got to see what they're up to. Where are they placing their money? Because if they're placing at certain locations, then obviously we may need to do the same thing. Because what? Supposedly, people with the billions of dollars are the smart ones. Yeah, right. Don't believe that in 1 second. But apparently, the public thinks that. Because every time that these people make moves, they drastically try to hurry up, issue out articles and tweets to everyone that follows them to say, hey, look, this is what such and such has been up to. Let's follow them. Michael Burry also placed millions of dollars against a short. You guys remember that? If you haven't, let me put you on game. Because look at this. This was a tweet from Bar Chart. Michael Burry is having a tough year after closing his short position in the S&P 500 and the NASDAQ for an estimated 40% loss earlier this year. So he shorted the S&P 500 and the NASDAQ, expecting it to go down. Apparently, if he was at a loss of 40%, those two indexes did not go down. So he lost, right? He also, then he bought puts on the semiconductor ETF SOXX with a notional value of $47 million. Again, expecting that ETF to go down. He was expecting the semiconductor market to go lower. Semis have gone straight up since. Look at this. This man, even though he called the massive crash back in 2008, these are examples of him getting it wrong. So when you try to compare yourself with your intellectual investment capabilities and your knowledge, these people get it wrong too. So don't be down on yourself. It's all right. You will miss out on calls too. If the people with the billions and millions of dollars at their disposal can't get it right, then what makes it think you're going to be 100% correct? So just relax and use these opportunities when the market, the public, the internet drops these articles that you want to pay attention to, like Michael Burry. You want to pay attention to what he has to say. Understand that he has a record of also losing trades. So be careful. That's all I'm going to say. Be careful, because bar chart gives you a graph to when he bought his short right here. And the stocks has gone up since then. Somebody left a comment on this tweet. He didn't take a loss on his S&P short. It actually printed for him. Then bar chart gave a reference, provided a receipt, an invoice saying that he did lose. Somebody wrote, I tried to warn the clown. Live look at Michael Burry right now, looking at that SOX ETF put option he had on it, $47.4 million. Now he's looking nervous. Did he get out of this play, or is he still holding it? Because Michael Burry is getting buried. Wow. Michael Burry's hurt now here with that short. Did he close out on that position? Look, let me go ahead and show you that we did a price prediction in the SOX, and we was looking for the market to go higher. Look at where it is today. So if he bought his put option price of the stocks was here. Look at pre-market. It is still going up in the stocks. $637.18. That's 26%. That is another misplay that he did not get right. So when we go through this article right here, understand that it's still a risk. It's not a 100% bet. So why would people try to give us this article? Why would they try to make us believe that he knows how to call plays when I've just shown you 3 instances the way he did not get them right? When they move, it's too late for us because they only have to report their trades, their buys and sells after every quarter on the filing 13F of the SEC. Those trades has long been made by the time you guys get to see that he actually did that. So, what stock did he add? Michael Burry, the money manager made famous in The Big Short, has added to wagers on Chinese tech giants Alibaba and JD.com in recent months, even as the rout in Chinese shares deepened. Alibaba is now Scion Asset Management top holding after Burry's investment company boosted its stake in the e-commerce giant by 50% in the period ending December 31st. According to the firm's most recent 13F filing, like I said, over the last quarter of 2023, he has been buying Alibaba stock. Here it is, February 16, 2024. You finally found out that he was doing it. So he had 3 months lead time to go ahead and buy all of his shares before you. So how is this going to benefit us? If he bought, maybe it's time for us to go and buy Baba and JD. What do you guys think? Because here, when you look at the chart, well, let me show you this Datarama graph right here first. So this is the 4th quarter of 2023. This is his hedge fund, Scion Asset Management, right? This is the activity of the 4th quarter of 2023. You guys can see JD and Alibaba. He added 60% of JD shares and 50%, 25,000 shares of Baba stock and 75,000 shares of JD.com. He bought other stocks too. Take a look. So maybe you want to go look at these other stocks because he has increased or initiated a stake in these other businesses. He reduced these particular businesses or stock. He sold some of these. And then he completely sold out of Stellantis, Urona, Hudson Pacific Park Properties, Crescent Energy. All gone. So he's actually making plays. And the reason why you know about these plays is because of that 13F filing that they have to submit. But when did he buy them? That's the problem. You don't know when he purchased these stocks. You don't know. And just like you didn't know when he bought them, you won't know when he sold them once that 13F filing has been released 3 months later. So this is not a very good way for us to take note as to what's going on with these hedge funds, with these individuals with billions of dollars under their name. Here's our price prediction in Alibaba. One that we did back in January, the 26th, 2024. Market already came and hit our first target already. So if anything, we have received almost 6% profit right there. Now the question is, are we still bullish? Are we still looking for the market in Baba to continue to go up? Because I think you guys can see that the market in Alibaba is kind of trading within a range. And that gave Michael Burry opportunity to accumulate these shares. So within the 4th quarter of 2023, right? October, November, and December. This is where he obviously had to come and purchase his stocks when the market was trading around these prices. So seeing where the market currently is in Baba now, if he didn't buy it like mid-December, he's underwater already in that position. Depending how long he's going to hold Baba, yeah, he's under right now. Depending on when he bought and sold. Like I said, we won't know that until the 13F filing is released. That's the problem, the disservice that these articles do for the individuals who reads them. This does us a disservice if you're trying to pay attention to what these billionaires are doing. We need to know the exact date of when he purchased the stocks, and we also need to know the exact date of when he sold them. That will give us a cleaner picture as to, okay, let's see how he's really moving. Without that, you're still left in the dark. Okay, so real quick look at Alibaba on the weekly chart. That last weekly bar doesn't look too confident in terms of strength. It definitely looks weak right there. Take a look at Baba on the 2 weeks. Still looks pretty weak. It doesn't look drastically weak, but it's weak. And even here on the 3 weeks, the market closed off the high of that 3-week bar. Be careful. I don't see that this market is turning bullish yet. I don't see it. So maybe it's going to take a little more time for Baba to consolidate. Like I said, I could definitely see it doing that. Consolidate with a slight lean to the downside. All right, so that's a very good bar right here. Check this out. On the 3-day chart, the market definitely got hit with some weakness after earnings was released, but then immediately it didn't go lower than that. The market closed higher than the previous 3 days. And currently on this current 3-day bar, we're still seeing the market in Baba trend to the upside. So yeah, I think the lean may be to the upside now that I saw that. So yeah, I'm not going to change my price prediction. I will tell you though, before I go, that if we see Baba get rejected around that $78 price target again, we may need to have another conversation, look for the market to go lower. Okay, so I'm looking forward to try to come back up and test $78. Hopefully it can break through. If it does, kudos, great. But if it doesn't, and you see this happen, then we might need to have another talk. Okay, so let's just see what happens with that. But yeah, I'm done. Give me your thoughts. Make sure you maintain the profitability. And as always, trade different.